Welcome, everyone, and clearly about what's happening right now in the crypto market, especially Cardano and the broader space. A lot of people are confused. A lot of people are frustrated, and that's completely understandable given the current prices and the overall sentiment. So welcome once again. Let's break this down calmly and logically and look at what's really going on beneath the surface. This content is for educational and informational purposes only. I'm not a financial advisor, and this is not financial advice. Always do your own research before making any investment decisions. Crypto markets are risky, and you are responsible for your own actions. Let's be real for a moment. The prices right now for Cardano, and honestly for almost everything across the crypto space, are not pretty. Compared to just a few months ago, we are significantly down. Yes, there are a handful of assets that manage to run and perform relatively well, but for the most part, we are stuck in what can only be described as a very frustrating, very ugly phase of the market. This is that garbage time where excitement is low, emotions are high, and patience is being tested. Like I've mentioned in other videos, a lot of people are convinced that we've officially entered a bear market. And while there may be some truth to that, the key point is that it's likely not as deep and not as long as many people fear, and I'll touch more on that in just a moment. What's really happening right now is that price action has been heavily influenced by the news cycle and by leverage liquidations. That combination has essentially been dictating where prices move, and it has dragged us into a very strange and confusing place in the crypto market. You've probably seen the talk around ADA going to extreme levels, people throwing out numbers like 15 cents or even 10 cents. And look, if that's where you personally want to wait to buy, that's completely fine. You do you. I'm not here to tell anyone what to do with their money. But what's interesting is that we heard this exact same narrative during the last cycle. People were begging for 13 cents, 17 cents, 10 cents, convinced it was inevitable. Watching this unfold now feels like déjà vu because it's playing out almost exactly the same way. The real issue is that many people didn't learn from that last cycle, and now the stakes are even higher. There is significantly more money in this space, far more capital capable of moving the needle. At this stage in the market, where ADA and many other assets are sitting price-wise, a huge part of this movement has been driven by leverage. When you start digging into the data, that becomes very clear. If you look at the daily exchange net flows over roughly the last 9 months, you'll notice a consistent pattern. Red, red, and more red. That means assets are being removed from exchanges. Even over the past several days, we've seen numbers like $14.94 million removed, $5 million removed, $4.28 million removed, and even today, nearly $1 million has already been taken off exchanges. And all of this is happening during what people are calling garbage times. Logically, you would expect that heading into a bear market or extreme lows, assets would be flowing onto exchanges, not off of them. But that's not what's happening at all. And this ties back to something we started discussing several months ago, the massive and growing amount of capital sitting on the sidelines. That sideline capital keeps increasing, and the big question is, what exactly is it waiting for? Right now, USDT dominance is sitting around 7.1% of the crypto market, which tells us there has been a significant surge of capital. In hindsight, we probably could have seen this coming, especially given the bullish flag structure that pushed dominance higher. What's really important here is that we are currently at dominance levels that we've only seen during some very specific moments in the past, like June of 2022, when the market hit extreme lows due to SEC-related fear, or November of 2022 around the Bitcoin bottom. We saw similar conditions multiple times throughout 2023, especially before capital truly rotated back into the market toward the latter part of the year. And yet, despite all of this, the overall crypto market cap has grown. Conviction has grown. There are fewer assets sitting on exchanges across the board, whether we're talking about Bitcoin, Ethereum, ADA, SHIB, or nearly anything else in the crypto space. This is where the disconnect really shows itself. People are expecting things to happen now that didn't even happen during the last full bear market cycle. We're holding higher prices, with more capital in the market, and with stronger conviction than before. At the same time, fear-mongering has been everywhere. Much of that fear hasn't even been driven by crypto itself, but by external narratives, the news cycle, macro concerns, tariffs, and general uncertainty. On top of that, open interest in the crypto market has dropped to around $109 billion, which signals a return to a more organic market structure. When leverage flushes out, natural trends take over, and that natural trend has been very clear: accumulation and removal. Accumulation and removal. It really is that simple. The reality is that previous rallies have already left a lot of people behind, and this phase of the market could make that even worse for those who are only focused on fear and short-term price action. That's why perspective matters so much right now. I truly appreciate you guys for sticking around and listening through this breakdown. I hope you found value in it. Let me know your thoughts in the comments below. I'd love to hear where you stand. Have a great day, take care, and I'll catch you in the next one. Don't forget to like the video, subscribe to the channel, and turn on notifications so you don't miss any future updates.